Hi everybody, Andre here, fxaaas.net. When it happens, we're there. We will tell you, subscribe, join us. We'll take you along this journey. In this video, I'm going to try and attempt to show you when it happens, right? Market manipulation. Is it real? Mm, it's nice to see these double tops, double bottoms, and just get blown away by it and enter trade because now peak formation high has been reached or peak formation low has been reached, and now we can just go ahead and trade. But these things that happen along the way that kind of makes you think, what the hell's going on here? I thought Steve says once peak formation has been reached, uh, I'm in a instrument, a pair that has an ADR with the pups I'm looking for. I just need to go along the way. Yeah, you can go along the way, but there's going to be a few shocks and surprises along the way. And this is where ICT, Michael Huddleston, comes in and I won't say he explains it. To me, he attempts to explain it. ICT, for me, just became basically, I'm confused trader, ICT, because there was so much going on here. But this guy did open my mind. And let me show you what I see, right? So let's switch over to the charts and we'll go through just two situations. And then you make a decision, okay, what you see. You can still trade, but be careful of what happens along that peak formation high and peak formation low. This is why we train traders. A peak formation high, peak formation low will tell you it started, and this trend for the day, intraday trend is going to take place, but it's not going to be a smooth journey. So let's see what happens. Okay, this is just a tab. Google it. Dad, what's Forex? Google it. Andre, what is currency weaken? Google it. Okay, so I Googled it. Here we have it. Currency depreciation is a fall in the value of a currency in terms of its exchange rate versus other currencies. Currency depreciation can occur due to factors such as economic fundamentals. Right, this is, how can I say, like austerity measures, quantitative easing, state intervention, and so on, right? Interest rate differentials, that's a big one always. Political instability, this is the one I'm looking at, right? Or risk aversion amongst investors, okay? It goes on to give an example, and you've got to follow this now. It says here, and this is exactly what I'm looking at here, but I'm going to use the Euro USD. Okay, for example, if the pound USD was trading at 127, this would mean that you pay $1.27 for £1. If the price of GBUSD rises from 127 to 150, the dollar would have set here depreciated in value. So now you've got to pay $1.50, right, for £1. It becomes expensive now to buy £1. Now, nothing has happened in Britain in this situation, right? Let's just say something has happened in the USA. And now it becomes a situation of, it becomes expensive to buy another currency with our home currency, so to say, right? Now they talk about Brexit here and all of that, and Brexit did cause not a lot of problems, a lot of opportunities in the market while it happened, and eventually when they reached a decision last year, there were good deals could be made. Okay, so now we know that when there's political instability, the value of a currency will depreciate. Okay, so let's close this down. Let's go over to our charts, and I've squared out something here, right? And I'm not going to get into a guessing game, but this is the 7th of January. Yeah, the 7th, or somewhere here, the 7th, let's just make sure. That's the 7th here, right? Let's the 6th. Yeah, usually on the display goodie. Right. So something happened here and it went all the way down. Right. This year, guys, was the attack on the American capital. Right. Or the invasion of the American capital by Trump supporters. And that is political instability, and the whole world frowned upon it because America was very polite with dealing with the situation. But this, because the whole world looks at America, America has a USD. The USD is the world reserve currency, the greenback. There was political instability. But look what happened. This flipping thing strengthened. All of a sudden, it became cheaper to buy the euro, right? It became cheaper. But according to economics and all of that, and I studied economics, I know for a fact that there ought to be a depreciation of value in this situation here. If you go to Venezuela right now, not go physically visit the country, if you look at their currency, it's depreciated because of political instability. The world's most classic scenario, well, besides Venezuela, is Zimbabwe. I mean, that thing went to a point, and I'm going to find a picture of it. Well, now I'm going to show you the actual note itself. I have a few $1 trillion notes, some dollars, and a few $1 billion notes. So when I was in that country, I was a trillionaire, right? I was actually a trillionaire once in my life. Okay. When I was doing financial systems, I was called up to Zimbabwe on, every second, third day to deal with this depreciation of the currency. I had to go in and change database settings to adjust to the new settings for the day. I can tell you so many countless stories, of this Zimbabwe situation. But because of political instability, what I'm getting at here is the Zim dollar just became worth nothing. Now, here is a situation where the dollar ought to have depreciated in value, right? But it's gaining strength. Now, we just ask ourselves something quickly here. Okay, from there, you can see it's 122, 123, 271, and let's just take it to this here, which surprisingly is a market block, to 125.26. So let's just say, for the sake of simplicity, it fell by 2 American cents, right? It strengthened actually by 2 American cents. Let's look at this now. Quick example, and then we'll move on to the next one. Let's say America owes the world, and you can Google this. Sorry about that. Let's say America, come on. Say America owes the world $1 trillion, right? The deficit is $1 trillion. That's 12 zeros. Is 6, 7, 8, 9, 1, 2, 3, 4. Yeah, this is $1 trillion, right? And there's political instability, and the dollar depreciates in value. Let's say it depreciates by 2 cents, right? Times point. Correct error. Depreciates times 1.02, right? All of a sudden, they owe the world, instead of $1 trillion flat out, they now owe the world $1,020 billion. Okay, but what actually happened here was they knew the consequences of this so-called attack on American capital by Trump supporters, and they knew risk aversion, right? So somehow the composite man, and the composite man it varies from one to the other, and the situation that's occurring right now. The composite man could very well have been the American government. And they stepped in and they somehow manipulated this thing down by 2 cents. So now it's worth that debt. So they assured themselves that debt has now decreased to $980 billion. And that for me is manipulation. There's no ways that a country has an attack on its capital, right? They walk into Senate or Congress, they put their feet up on the desk, they go through this lady, Speaker of the House, Pelusa or whatever, Pelosi, and they rummage through documents and laptop, all confidential things, right? For which Hillary Clinton is being drawn across hard coals for. And these guys walk in and they just do what they want to. And the whole world frowns at us and wags a finger at America. And America turns around and says, bugger you, I'm going to strengthen the dollar. And this is exactly what they've done. And it's still happening till today. Maybe now after Biden eventually became president, there was calm in the country and now the dollar is strengthening now because we trust this guy instead of the rant and ravings of Donald Trump. So there is no true value in this here. I'm not quite sure. But in the same breath and tone, uh, if the dollar strengthened to the euro, right, it did not do the same, if I'm not mistaken, it did not do the same with its neighbor, right? Let's just see here. You see, yeah, it was the 7th of January. Is it there? Nothing happened there. You just played around. And then all of a sudden, it became expensive for the Canadian dollar on the 11th of January to buy a dollar, right? This is US CAD. Okay, and then it came down again. So nothing happened there. Now the world's most traded currency is the Euro USD, right? And there's a need and urgency to attend to this matter immediately. And this is how it was attended to. But a currency like this, a pair like this, the US CAD, it's not that urgent, right? Because I think, I'm not quite sure, but you got to Google it. There I go again, Google this. This is the most traded pair in the world, but the percentage of it being traded, I'm not quite sure. While we check in and yada yada in here, I'll have a look at it. I'll see if I can put it up on the charts, right? So that for me, guys, is manipulation, right? Pure manipulation. And those times when things like that happen, you either take advantage of a situation or you stay out of the markets. You got signals that's going to tell you there's activity with a Guatemalan currency versus the Honduran currency. I don't know. There's just countless opportunities in the market. When things like this happen with the big boys, stay out. Right. The next one is this one. This is our home currency. USDs. And I tried to establish a relationship with this thing and I just couldn't get it. Now, I've made a square around this here. It's an area of interest to me. And you'll see a double bottom here, right? And surprisingly enough here, this double bottom was at 1 o'clock and then at 2 o'clock. And see, there's a semaphore here. Right, there's a semaphore here. So it doesn't look like railroad tracks, but it's a double bottom to many, or from there to there. And then it shoots all the way up and then we say, wow, pardon, there's Steve Morrow at his base. Let's go for it. And we get into the straight and we just plodding along all lacquer and everything. And there's a little pullback here and then it's a top spike to the top. And then all of a sudden this guy reaches down, all the way down, and grabs all the stop losses of guys that entered this long along the way. Right? Went in, grabbed all the stop losses, if they were, if you were still in a trade till the very top, and thought it's going to go higher with that spike. And he went in and he grabbed whatever he could. And there were guys that were saying, you know what, if he comes down here again, I'm going to enter, so I'm going to put a limit order here. And during this time, with this spike would drop to the bottom, and I'm going to show you this now, guys went short, right? And when they went short, he turned around and then he went long again, right? So he took out all the stop losses here. You open up limit orders, right, for the way up, took them out, right, with this drop here. There's up and down movement probably in here. But guys who went short here, thinking now, you may not see it in this 1 hour candle, but thinking that it's going to continue on its way down, he shot up again and then he started ranging and then deciding, well, what can I do now? So let's go down to a 5 minute and see if we can see what happened here. But my whole aim here is manipulation does not happen only at that point with double tops and double bottoms. It happens along the way. It happens at the end of the day. This could be the New York reversal, and this is an exotic currency. The USDs are, and this happens often. And let's switch over to a 5 minute chart, and this square will remain, and we can see what I'm talking about, right? Ignore this here. This is also interesting. Maybe that 5 minute. Let's see if I can see it. Ah, there's it, right? There's it. Okay, so this is a 5 minute chart, and what we see here is that square. I kind of bordered out, painted, but that activity, that double bottom took place here on those two 1 hour candles. So let's put a 1 hour candle in, see if we can see it easily, the double bottom. And from that point onwards, we've seen that double bottom, right? There we got a nice double bottom, and maybe we went for that trade, and there's another double bottom. We're like, wow, another one, and we go into that trade here, and guys are entering along the way because they've seen a double bottom here, they've seen a double bottom there. This here is a good trade, you know, from there to the somewhere there. That's 12,000 rand from here to here. Let's put it here, amazing, right? From there to about there. That's another 12,000, so 24,000 rand. If you're a wise guy, you right now. I said manipulation takes place also along the way. It comes to a point here where, and this is what you gotta understand, he's giving away money here, right? And then those guys are entering and putting stop losses here, entering here, putting a stop loss immediately behind the entry, putting a stop loss and seeing this thing's going up and moving the stop loss out to minimize it. And all of a sudden, he starts playing around in this area and he notices his stop losses down here and his limit orders down here because of this swing going up. This is a 1 hour candle, and he doges around there and then boom, he comes down, right? And he grabs all those stop losses out, all of them, right? If there are any, but they are, and he takes him out. For guys who was hoping that this thing would go higher, right? And in the same breath and tone, this is a 5 minute candle now. He starts going down, and all of a sudden, these guys, there's these 5 minute traders that, wow, this thing's going down, and according to them, and they oscillators, and they see this massive shark fin here, 5 minute shark fin. Remember, I said shark fins are good trades. Yeah, but this one, I didn't say 5 minute shark fins, right? I did not. I said shark fins, and I said I trade 4 hour, and then I go and I look, and 1 hour, 30 minutes, and maybe I eat on a 50 minute. This is a 5 minute, and I know these guys are there, right? So they see the shark fin and they're in, right? And they think this thing's going down, and this thing spikes massively, and then it shoots up and takes out all your stop losses along the way. Maybe opens up on the spike here, opens up limit orders, shorts, and takes out his stop losses immediately, and then he's done for the day. He ranges. I had my fall for the day, and I've done what I want to do, and that is manipulation. You cannot explain this in any other way. There was nothing of all of a sudden there's these 30 million Japanese guys that decided to buy the rand and pull out immediately. This is manipulation, guys, and this happens a lot on exotic currencies. In fact, any currency where there's areas or pockets of liquidity, you get into it He'll entice you along, double top, double bottom, and then he'll do this little funny thing here. So Steve Morrow is correct in what he says, right? This could very well be the New York reversal, but this didn't reverse. It went down, done what it needed to do, and then went back up to where it was and started ranging and ranging and ranging. It's still ranging. And when it breaks above here, you could say there's now some activity taking place here, right? And that for me is classic manipulation. So in my video, did I get what I wanted? When you have a look at that, the final one of expectancies is 4 in it. You'll see how, and if you read up on my journey, these are things that I recognize with Huddleston, right? Michael Huddleston. And I know Steve is correct with his double bottoms, but there's things that happen along the way that Steve just doesn't quite get into. I won't say he's avoiding it, he just doesn't get into it. Now, the final block I have over here is a Huddleston block. And I'm going to take this out. And this here is what he calls the distance between two areas that have not been penetrated by a candle in either direction becomes what he calls a fair value gap. And he says this fair value gap will be revisited. And I like, well, why you want to revisit it? You know what I mean? It doesn't make sense to me. He says when there's a fair value gap, it will be revisited. He doesn't quite say when. I mean, nobody can quite say when. He just says it will be revisited. And this is still only used these are 5 minutes, and there's a fair value gap here. There's a distance between these two candles here. Right? I'm going to take this 1 hour out. Yeah, you can see. Right? So, there's a fair value gap. Pardon. And notice how it bounces on this particular line here. I don't know what's that line. But I put this block in myself, right? This is my block. To say it's a fair value gap and it's going to come back. And look what happens. It came back. And it stayed within the confines. Well, it tipped it out a bit there and there's an order block there. And it came back exactly at the close of trade for the week. Friday. It came and it closed on that fair value gap. Right? Close on it. So fair value gaps are places where it's going to come back. So, how do you enter this particular trade? This is the question now, right? Because you need to find, for me, I will try to peak formation high with some change of character in the market, right? I'll say, well, there's something there. And wow, look at that. It came back to the fair value gap. And I'll say, okay, now I found it. He's going to come down to this fair value gap. I'm not quite sure when, but that's a 12,000 Rand, almost 30,000 Rand trade for me. All right. So that's manipulation, my view of it. I stand to be corrected, but that's how I look at it. I don't go into much detail with cost analysis and, the cow jumped over the moon and the solar panels must face this way. I don't get into that. I recognize a few things and I do see it happening, and I recognize institutional trading, and I trade for pips. I don't trade, and I trade within the limits of what the ADR gives me. All right. So that's manipulation, guys. I hope it, well, I'm not saying it clear things up, but it's just to make you aware it's actually there in the market. But it's not, as Steve says, just between double top, double bottom, and that's it for the day. Cheers, bye-bye. Yeah. It's not this alone, double bottom, double bottom. I mean, you could very well say, no, you can't say that's a double top, really. But double bottom, and then on the way up. And then you're waiting for this New York reversal, which never took place. And there was this massive manipulation here. So be careful when you trade exotics. It's very exciting to make your 12,000 there and your 12,000 there. But there's always this in the market. Right. Have a good day, everybody. Enjoy your day and join us on our next video. Cheers. Bye bye.